Today I'm going to show you how to trade the 5-minute chart using voids. This is a simple game-changing strategy that you can start practicing right away. There's a lot of people asking me to make another video about this, so if you didn't see the first one, I'll leave a link for that in the comments below. If you're not familiar with voids, you definitely don't want to miss this. There's a few different names that this can go by, and I've seen your questions about this as well. Some people may also call these gaps or fair value gaps, and there may be a few different other names. It's essentially the same thing. A void is created when there's an imbalance between buyers and sellers. This is created between the first and the third candle. It will look like one large candle that created it. How do we know this? Well, the chart leaves clues. Just look to the left and you can see this happening over and over again. Just go back as far as you can. You will see this repeat itself over and over. How we make this powerful is we're not looking for any type of void, because you can see that on the chart here, there's several spots where voids are created. So you start questioning where the best spot to get in. You can see this large impulsive move to the downside, breaking structure here. Now you're marking this area off, looking for an opportunity. When price comes back, if it chooses to, you're choosing the highest point out of the whole leg to get in on the trade. And at that point, you get in. Your stop loss, you have to keep in mind, price isn't always going to just come up to this area and change direction. Sometimes it's going to come up a little further. You can't predict where it's going to change. It may even choose just to keep going. So you're not going to get every one of these. But when price comes up, you have to decide what type of entry pattern you're going to get in on. Target the low or another low. Stop loss above the void. You could have it tighter. You could have it higher. It's entirely up to you. When we go through this, you can see that we've got this area. You'd mark your voided area off. And what you're doing now is you're watching for price to come up. And if price does, you'd get in on the trade. And you can see here how price came up. Touched into it and it went in part way, didn't go up very much. And then price started changing direction. So when that happens, you're either getting in when it, like I said, when it gets in on this, you may even drop down to a 1-minute chart if you want and look for a specific candle pattern. But your stop loss would be ideally above the void, and you would be targeting the low. And you can see how that played out. And this was a risk to reward, 3.75. And when you're looking at how long this trade played out, it was a 40-minute trade. Not bad. That could have been great for the rest of the day. Now we're going to take a look at a few more just to show you what I mean. Okay, we're looking at CAD JPY here. Price came down, broke structure. Up above here, you can see a voided area. What you want to see now is you would like to see price come up to this area, and then you would be targeting the low here. Price comes up. As soon as it comes up, you're entering in on the trade. Stop loss where you choose, but we'll put it just above the void for this example and target the low here. Or you could be targeting the low here as well. It all depends what you want to do. You can see with this one, the risk to reward was 4.09. You didn't need to manage this trade, but if part of your strategy is managing it, then you should do that all the way through. Okay, we're looking at GBP USD. Same thing. Price breaks above. We're looking for the furthest point away, which is right here. You mark your area off and you are patiently waiting for price to return to this area before getting in on the trade. Price comes in, you decide where you want to place your stop loss, and your take profit should be somewhere up above. If you take a look at this, so when you're deciding where to put it, it's entirely up to you. You can see at this point, let's just say this is 4 pips away right now. So that's still tight stop loss. And if you're targeting the top, risk to reward 4.73. Played out really quickly. It isn't always going to work out like this for you, but you can see how powerful this can be. You're going to find that price reacts to these voids all over the place. When you start looking everywhere on the chart, you're going to notice it over and over again, but just try to reduce the amount of voids that you are taking. Look for very specific ones. Try to focus on the furthest ones away to help reduce your losses. Okay, we're going to cover this really quickly, what we talked about. You can see on the chart, price is moving up. No confusion about that. Then you see price stalling out here, having a hard time going up any higher. And if you looked at a higher time frame, you would likely see that it's in a key area. Price is reacting multiple times, tries to come back up to it, and then there's a strong impulsive move to the downside. And when this happened, it created a void on the chart. And what this is an imbalance between buyers and sellers, and price will often come back to this area when something like this happens. And you know this because if you look to the left of the chart, you'll see that this happens over and over again. You don't want to focus on any other voids, because if you look further down, you can see there's a small one right here, and sometimes you'll see even more than that, but you don't want to pay attention to those. You're looking for the one furthest away from price, which is this one right here. You're going to the highest point, or the lowest if it was going the other way. And this is where patience comes in. And if price does decide to come back to that area, you're looking for an opportunity to get in on the trade. It doesn't mean that it's going to respect it. Some people may get in on the trade as soon as it touches the void. Some people may have the 50% area marked off to get in on the trade, and you can use a Fibonacci tool for precision if you want. Stop loss could be just above the void, could also be just above the high. It really depends on you, and that's why I recommend testing every strategy out on TradingView before you use it. And that's all it is to this one. You don't need to complicate it. We'll keep it simple as can be. Thanks for taking the time to watch this. If you enjoyed it, please consider subscribing, liking, and sharing. It really helps out the channel, and I appreciate each and every one of you. Until next time, bye for now.